Now we're going to turn to emerging markets in Europe, and we'll try to wrap this one up a little bit quicker. And when we look at so just speaking about Russian farmers, because they produce a significant amount of grains and cereals for the market, but so Russian farmers harvested 2.46 million hectares of wheat as of July 13th. Versus about 5.43 million at the same time last year. And when you look at what the yield is down almost six per, which is just a huge knockdown, just given where things are in terms of how much wheat is going to be put in. And this is just speaking about wheat for a moment, just speaking about the issues that remain on the wheat side, which we'll talk about more on Friday when we talk a bit about where some of these is going to shake out going forward. This was an interesting chart that we saw looking at total mobile service revenue per gigabyte, and then the gigabyte per SIM card. So you can see that just where the cost is and where we are on the cost curve, that the U.S. is actually fairly far down that when you look at just where. But to my Canadian friends, I apologize, because that is terrible. And I actually had no idea that was the case. And it's just when you think about what the U.S. is trying to do, and the reason why I bring it up is talking about infrastructure and giving people broadband and internet and just looking at what that looks like. You can see where the U.S. is, that our total service revenue per gigabyte is actually fairly elevated versus some of the others. And I just think that was an interesting little tidbit. I just thought I found it, and I thought that might be something to throw in that could be interesting to some people. But now let's talk about forecast revisions to global growth, as we've been talking about, but looking at it from the level of emerging markets. So emerging market and developing economies are above median vaccination and below. So when you look at the vaccination side, this is where you see some of the elevated problems that we've talked about. And it's not just in emerging. There's South Korea, Japan, other parts of Asia that continue to struggle to kind of get this initiative on vaccinations, and the pressure that puts on overall GDP growth and just realistically GDP, the consumer in general. And that's why there's this movement to try to get people vaccinated, to try to avoid some of these slowdowns. Now, whether the variants are more or less deadly, if you get Delta without a vaccine, with a vaccine, if that's going to result in something similar, this is where the unknown comes in, and why there's such hesitancy in terms of activity, which is why we think that even if you are vaccinated or have a country that has a higher vaccination side, you're still going to see consumers doing a little bit, happening a little bit differently to try to avoid undue exposure, especially when you look at kind of where things sit as we broke it down in the EIA show and previously when we look at activities. But what has this done? Well, countries have issued a lot of stimulus. Central banks have issued a lot of stimulus. And that's why when we look at the emerging market inflation surprise index is growing exponentially at the emerging market level, where they can't handle surprises. So in the U.S., you get a surprise. There's a lot of things that the U.S. can do to mitigate those issues. And we have the reserve currency of the world. Even though it is falling in favor, it is still the lion's share that is used on the trade side and at the central bank side. So that has created some of these issues in general that has put more problems where where we don't have that problems, but in EM or emerging market, if they get these big surprises, people panic. Not just the market, but those locally panic. And that's where you can start to see this acceleration and this fear factor that comes in, which is why central banks try to stay ahead of some of these issues to try to mitigate some of the problems that can arise from this type of surprise. So then when we look at the emerging market central bank hiking rates, this is giving you an idea of what the year to date has been and what the forecast is to be by the end of the year. So when we look at Poland, Chile, Mexico, Hungary, Russia, Turkey, there's an expectation that rates are going to continue to go up as they try to get in front of this inflationary push, because the worst thing you can do is have this big surprise and not be prepared for it or not react to it quickly, because things can spiral very quickly, as we talked about in the as I talked about in the Politics Today article, looking at Yemen, Sudan, and Iran. I'm not Yemen, sorry, Lebanon, as Sudan and Iran. So then when we look at wage price spiraling in the Eurozone, so there's still not an increase in wages. So wages still haven't, really pushed through, which is going to minimize consumer spending over the longer term, because you'll get a spike as people go out or reopen. But it's also going to keep inflation a bit more muted, because you're not going to get that piece of the cost getting pushed into the system. Now, that's going to have to adjust. You're going to have to start to see that come back, and especially if you want to bring people back to work, which is why inflation will remain lower there than in the US, but there are still raw materials, shipping, all of those supply chain issues that we know about and are experiencing. But the wage side is going to be that's going to keep that a little bit lower. Now let's break it down by country. So first, we'll do Germany. So German wholesale price index was at 1.5%. Wholesale price index was up to 10.7%. And you can see that, on the month over month, still a steady increase, year over year, base effect coming in, but again, still seeing that drive higher. As you look at CPI, CPI still moving up very much in a very stable level, just given where some of those next level movements will be. And we'll talk about inflation going forward. So industrial production throughout the Eurozone, missed estimates came in at, it was expected at negative 0.3%, came in at negative 1%. Year over year was expected at 22.2% growth, came in at 20.5. So we knew May was going to be slow, and we talked about that back. But when we look forward, June especially, but June into July is going to be much better for the Eurozone. Not so much Germany, though. And that's when we talked about last week and the week before, when we broke it down by car production and construction, which is going to be a headwind for Germany. So even though the Eurozone will do better, it won't, Germany will act as like a cap to what that growth could really look like. So then when we look at Spain, house transactions are up in May, but then when we look at June, you can see that inflation is starting to creep up in Spain, and the Spanish economy is not acting or really doing as well as some of the others, which is why inflation picking up there is going to have a bigger impact than some other places when we consider the health of the region. So when we look at France is more along the German lines in the sense of CPI is still fairly under control, fairly muted for where things are going, which is why we continue to talk about some of the growth that we see where France is shaping up, as well as Italy, to be a bigger surprise to the upside. But the sheer size of Germany versus France and Italy is going to keep that fairly capped when we look at exports, imports, and some of those headwinds. And then when we look at Italy, you can see that the industrial production side, it was supposed to be at 0.3%, came in at negative 1.5% year over year. Was supposed to be at 24.8%, came in at 21.1%. But again, that was May. Now we have a lot of new investment. We have the PEPPs that have been increasing. There's more movement on a country level as well as an ECB level, which is going to be supportive of some of. So again, May is more of a look back. And when we look at Italy going forward, we think Italy is actually going to surprise more to the upside, just given the amount of stimulus that has come into the market, specifically in Italy, and with France doing fairly well. And that's where the Eurozone will have a net growth, but that muting factor will be Germany going forward, and then Spain on a smaller degree, but again, still moving in the right direction. So try to keep this one a little bit shorter. And now in the next segment, we're going to talk more about Asia, and more specifically China, and some of the things that China has done over the last few days.